Welcome to the Riskwiser Zone, the show where we help you navigate the world of stocks and finance with clarity and confidence. As we always say, risk comes from not knowing what you're doing, so let's dive into the latest news and insights to keep you informed. We've got an interesting story for you today, all about the pursuit of yield in a world where interest rates are still relatively low. You see, many investors are on the hunt for investments that can provide them with a steady stream of income, and one area that's been getting a lot of attention is real estate investment trusts, or REITs. Now, our first story takes us to Universal Health Realty Income Trust, a company that's been making waves with its 7% yield. That's right, folks, a 7% yield in a world where the 10-year Treasury is still hovering around 4%. But as we always say, if it sounds too good to be true, it probably is, so let's take a closer look. According to an article on Seeking Alpha, Universal Health Realty Income Trust has a durable portfolio of medical properties that's been supporting a steady stream of income for investors. The company's revenues have grown every year from 2015 to 2024, with steady rent increases and portfolio expansion even through economic stress. And with dividend coverage remaining strong, it's no wonder why income-focused investors are taking notice. But as we always caution, there are risks involved. Changes in U.S. healthcare policy and tenant concentration are just a couple of the potential pitfalls that investors need to be aware of. So, is Universal Health Realty Income Trust a good bet for income seekers? Well, that depends on your individual circumstances and risk tolerance. On the other hand, we have another story that's warning about the dangers of yield chasing. According to an interview with Amplify ETF's CEO, Dominic Chu, yield-chasing ETFs may have jumped the shark. That's right, folks. The pursuit of maximum possible yield can lead to a yield trap, where investors sacrifice long-term capital appreciation for short-term gains. So, what's the takeaway? As we always say on the Riskwiser Zone, it's all about balance and diversification. While yield is important, it's not the only factor to consider when making investment decisions. You need to think about the bigger picture, including risk management and long-term growth potential. And that's a wrap for our opening segment. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're exploring the intersection of technology and society, and today's stories are shedding light on some critical issues. Our middle segment takes a closer look at the ongoing challenges faced by social media platforms in their quest to balance user experience with the integration of artificial intelligence. We've got two stories that highlight the complexities of this issue. Firstly, Pinterest is still grappling with its AI problem, as users report that the platform's automatic content moderation system is incorrectly flagging human-made images, while actual AI-generated content continues to proliferate. This has led to frustration among users, who feel that the site's tools to curb AI-generated content are failing to prevent these images from appearing on their boards. On the other hand, we have a story about how AI is being used to disrupt the cybersecurity industry. Some investors are betting on AI companies that promise to revolutionize the field by automating tasks and reducing the need for human intervention. However, experts warn that this approach could lead to a degradation of quality and an increase in errors, as humans are removed from the loop. It's essential to consider the implications of relying heavily on AI in these critical areas. While AI can bring many benefits, such as increased efficiency and speed, it's crucial to ensure that these systems are designed with safeguards to prevent errors and protect users. As we navigate this complex landscape, it's clear that finding a balance between harnessing the power of AI and maintaining human oversight is key. We need to have open and informed discussions about the potential risks and benefits of AI integration and work towards creating systems that prioritize both innovation and accountability. Welcome back to the Riskwiser Zone. As we wrap up today's episode, let's take a look at some exciting developments in the world of finance. Visa Inc., The global payments giant has announced its plans to acquire two key payment companies in Argentina, Prisma Medios de Pago and NuPay, from Advent International. This strategic move is expected to boost Visa's presence in the rapidly growing digital payments market in Argentina. The acquisition will bring together the local expertise of these companies with Visa's global technology, enabling the company to dominate the market and roll out cutting-edge features such as tokenization, biometric authentication, and agentic commerce solutions. As Gabriela Ronaldo, Group Country Manager for Visa Argentina and Southern Cone, noted, this deal will enable the rapid rollout of innovative features in Argentina. In other news, SAP SE, the enterprise application software giant, has announced a proposal to raise its annual dividend by 0.15 per share, representing a 6.4% increase year-over-year. The company's supervisory board and executive board have proposed this increase, which will bring the annual dividend to 2.50 per share. This move is expected to align with the company's policy of distributing at least 40% of non-IFRS profit after tax. SAP SE also released its fiscal Q4 2025 results, which showed a 18.46% year-over-year growth in revenue, driven by a 23% growth in cloud revenue and 28% growth in cloud ERP suite revenue. The company's cloud backlog increased by 16% year-over-year to 14.052 billion. While both Visa and SAP SE have shown promising potential, it's essential to remember that the investment landscape is constantly evolving. As we always say, don't put all your eggs in one basket. It's crucial to diversify your portfolio and keep a close eye on market trends. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.